Hey, I'm Dan Fitzpatrick at StockMarketMentor.com. Okay, it's Monday, and I want to look at Sherwin-Williams here. They make awesome paint. We got it all over our walls. But what I'm talking about here is the way the stock has broken out. You can see a big shakeout here at the 200, gathered itself right around the 50-day moving average. All right, and so since then it's run up, pulled back. Now it's breaking out to a new high. Okay, big deal. We see that in a lot of stocks. What's impressive to me is the stock split 3-for-1. And typically, now back in the old days, in the late 90s, you didn't have to be particularly smart to make money in trading. You just had to have a pager or some information that told you when a company was splitting its stock. You go in and buy a bunch of calls, and the next thing you know, old Jed's a millionaire. I mean, stocks would go up on stock splits like it was just stupid how they worked. And then they stopped working, and of course, a lot of the people who thought they were so smart, turned out, to let's just say they weren't so smart. But over the past, I don't know, decade or two, we'll say, what's happened is the market's kind of got a little bit more sane. And when a company splits a stock, this is what you have to look at as a trader. Okay, you see that this, the stock's been running up a lot, just 15%, fine. We want to know whether a run-up is due to the company being so awesome that everybody wants to buy the stock, or maybe it's just illiquid. Maybe there aren't that many shares to buy, and so anybody who wants to buy a stock here, Sherwin-Williams, anybody who wants to buy the stock has to pay up for it. And so I'll say kind of like artificial demand, which actually it's not really demand, it's just a lack of supply. This gives the appearance that the stock is really strong and in huge demand. And then what happens? A company splits its stock, that marks the high. You're done. The stock just keeps, starts drifting lower and lower and lower. Why? Because the only reason the stock had been going up was because, large institutions had to be buying a greater percentage of the float than they typically would like to. So when the float is increased, like it was here on a 3-for-1 stock split on April 1st, and the stock's up more today, okay, this is a good sign. And so I want you to take note of that. Just know that these stock splits can actually mark the top of a stock, but they give you good information. If the stock does not pull back, then you can buy with a little more confidence. And so I would say here, I would be buying with a little more confidence, and I'd keep my stop just a little bit below the April 1 low. Well, it's 244.67 is the low. I'd put the stop at 244.60, right about there. You got about 4.5% risk. That is not a bad risk on a stock like this. So anyway, members, over to the strategy session. Look, if you haven't tried Stock Market Mentor, first 30 days are on me. And so we're doing really well. The market's doing really well. So this is a good time for you to be bumping up your knowledge right along with your equity curve. Okay? I'll see you over there.